Hi, my name is Alex Carlucci with Dale Allentunny from Guston Show, and we have a special guest with us today from Dream Home Financing, Eric Jeanette. We welcome Eric. Today's topic is rates are dropping, and the reason we're doing that topic today is because 2 weeks ago the Fed took a pivot and they changed their whole tune from being very stern that they're going to be hiking rates to we have probably done hiking rates, and now we are going to be lowering rates next year. They think they've done enough. And rates are front running everything the Fed's saying. They're jumping a year ahead to where the rates should be. And right now is a really good opportunity. So if you've been sitting on the sidelines waiting for that 3%, I think it's a bad idea. If you need to get cash out, I was selling 8.5 2 months ago. We're in the high fives if you got good credit. So that's a big enough move to not take a chance and wait for these rates to go lower. They could actually go higher. We could have higher demand. It could be inflation coming back. Who knows what's going to happen? So if you've been sitting on the sidelines waiting for lower rates, this is not a bad time. If you're selling a house and buying another house, it doesn't make any sense waiting because if you need to move, these are decent rates. If you think it's going to go lower, you can always refinance. If you think property values are going to go lower and you're going to sell a house, you're going to lose money on that. So I think right now is a good time to swap out one house if you're looking to move and you've been waiting, or you need some cash out because you're a little concerned about the future. You get a decent rate. And if you got bought a house 6 months ago and your interest rate was 7.5, maybe I get you 6% right now. You can save $200-300 a month. So I think now is a good time to get in and don't wait for that 3%. It may come, it may never come. And why wait? If you need to make a move, a house is a big purchase. If you're sitting on the sidelines for 2 years waiting for something, I think your life's going to pass you by before it's too late, and your kid's going to be
Alex,
graduated. So go ahead.
yeah, Alex, real quick, I wanted to add to, something you said there. I mean, it was historic when the rates dropped in the twos and threes. We had never seen that in all the years we've been in the industry. That's something that you cannot assume that's going to come around again. If it does, then you can benefit by refinancing with it. But when you have rates in the fives or even the low sixes, that's historically still like a good range interest rate wise and shouldn't be a reason why you sit on the sidelines. And it's only going to get more competitive to buy a house the quicker rates drop, the farther rates drop.
Let's welcome our newcomer, Eric. What do you think
Yeah,
about?
Eric, come on in, Eric.
I agree with both of you. I think you you don't want to wait to hope that rates hit another historic low. That's quite a long shot. And you're better off buying the house now. If it's the house that's your dream house you want to live in, just buy the house. If rates happen to drop, then you can refinance, like Dale said. And if conversely, there's more room for rates to rise than to drop. Or if rates rise, then you'll be happy that you bought when you did. You've got the best of both. You've got, okay, I locked in at a rate before to buy in my house before they jumped up again, or I own this house and I bought it at a time when there wasn't this pressure from low rates to push the market up. Because if the rates do drop to threes, then you have everyone out there outbidding you on homes, and they push the prices up. So what you thought you'd be saving from a rate, you might not have a savings because now you just paid too much for the house. So if it's the house, bottom line is if you see the house you like, don't be afraid to buy it because rates are in the fives or even in the sixes.
Right. So because rates are dropping and because rates were at 8.5 2 months ago, a lot of people were paralyzed and didn't do anything. And now you see an increase of listings happening. Not everywhere, but a lot of places you see a lot of listings. And now the sellers are willing to work with you. So if you wait to rates to drop to 3, they're going to be taking the best offers. There's going to be multiple offers. You're never going to get seller credits. And a lot of my clients out there need seller credits to get these loans done. And if you want, you can get seller credits to buy your rate down even further. So you can get it, maybe you can get into the high fours with getting a seller credit. And right now, this market's turning. It's no longer strictly a seller's market. There's enough supply there's enough fear in the seller's eyes that they can give you a credit now that they wouldn't give you 6 months ago. I'm not saying it's flip-flop completely, but it's churning. And if you wait for it to be really turning to lower rates, if that ever even happens, then you're probably going to lose that ability to get credits. And I deal with a lot of people with low credit scores, and they need those seller credits. They barely have enough money to put down, and I'm getting those now. I have no problem getting seller credits. I have to ask for 6% sometimes, 4%. And that was, people will laugh at me a year ago. They're not laughing at me anymore. They're welcome to
Right.
give.
Alex,
Go ahead.
explain the benefit of a seller credit for those of you out there who don't understand it. If the rate, for example, is 6% and you got a seller willing to contribute 3%, that might allow us to buy the rate down to where it costs money to get the rate. That means discounting the rate. But having the seller help you do that may get the rate to what, 5.25, 5, something like that, Alex? It depends on the scenario.
It really does. It depends. You know, the rates change every day. And like, so for example, let's just say the free rate right now is 6% for your credit profile. I bet you 5%, you could probably get it for 2.5, 3 points. So you get seller credits of 3 points. Now you have a 5% interest rate. And you're locked in for 30 years. You don't have to wait necessarily. You're getting close to a place where it's purchasable to get, maybe even get in the fours. I'd have to look at it. If you got a paper credit, 800 credit score, I'm sure we can get you the fours, no problem. Now, if you are satisfied with today's rate, the seller credits will pay all your closing costs. And those things are going up with inflation. 8, 9 grand on a $200,000 house. It used to be 5 grand 3 years ago. So coming up with that 8 grand and the 3.5% down can be overbearing for clients. So you can use a combination of buy the rate down and pay closing costs.
Alex, let me ask both you and Eric a question. So there's an old saying that all sellers are buyers, right? So if you're in your house in Chicago and you want to move to Florida, you're still a buyer even though you're selling in Chicago.
Yeah.
And do you think that maybe the tick down in rates, down to 6 and the 5s is going to spur more people? Like you said, listings are starting to pop up. You're going to see more of that. People are going to want to either downsize, they're going to want to move out of state. Maybe they want to go to a bigger house because their family's expanding. What do you think?
Don't know. I don't know. I think that if they are mobile and they can work remotely, I think there's a lot of affordable places in the United States right now that you can, with this rate right now, your payment's actually affordable for your income that didn't exist 2 months ago at 8.5. So if you're mobile, I think you can find something in some state. I'm not saying every state's that way. There might be areas near you where prices haven't moved at all, and maybe it's not the right time for you. But you have to look at each person, one
Yeah,
by one.
in the end, what it's going to come down to is if you've been on the fence and thinking about whatever your situation is, whether it's moving to a warmer climate or whatever it is, now the fact that rates have come down a bit, it makes that decision a little bit easier.
Yeah.
A lot of people were, holding out, waiting because they thought rates were really high, and even when they were, high sevens and low eights, still wasn't. It was high compared to what we had a few years ago, but in the last 20, 30 years, it wasn't high, right? It's right in the
Right.
middle.
Absolutely.
But what it does is whatever their situation is, because everyone's different, where the rates are now, it's like, okay, if you were just thinking about it and you're waiting for rates, don't wait anymore. They're where they need to be. Do it.
Yep. And again, if you want to refinance right now, let's say you did get 7.5 last summer and now it's been 6 months, we get you 6.5 because your credit score maybe is still low. We're getting you get you 6.5. You're going to save 1% on your rate. That's better than what the professionals say. They say save 3/4, do it. And what we're going to offer, I mean, I'm going to offer this to my clients. I don't know if Dale and Eric can offer this, but I'm going to offer to pay some of the closing costs on the next refinance if they drop lower. So that's something we can offer you and put it in writing. So if you do close and rates do go down, we can help
Right.
cover some of those closing costs on
Sure.
the second refi if you were too early. So there's no cost to starting over again.
Yeah, and I agree with you, Alex, on your earlier point about, negotiating seller credits for the closing costs and really trying to include buying the rate down. Even if you had to pay a couple thousand more for the price of the house in exchange for the rate buy down,
Yeah.
when you do the math over 5 years, right? Let's say it
Yeah.
costs you pay 5,000 more for the house for the seller to do the rate buy down, but whatever it is, and you got a $300,000 loan, you're saving a point. That's 3 grand a year. So
Right.
now you just save 15 grand, over
It
five
pays for
years.
itself in a year in 2 or 3 months, and then
Yeah,
you're saving that over the long run. You're going to save $40,000 or whatever.
right. So as long as you have a real estate agent that's going to be helpful and helping to negotiate that on behalf of the buyer, then it's a really good tool to use.
So I've actually talked to some people even family members, they're like, well, I want to wait till I have 20% down. I told them, I don't know if that's a good idea. You know, if you're maybe have enough to put 10% down, put it down now. Yes, you do have mortgage insurance, but I would guess in a reasonably short period of time, you're going to have, between the appreciation of the value of the house and the reduction of the mortgage balance, you're going to wipe that mortgage insurance off the slate. And now you're going to be a homeowner. The longer you wait, in most cases, the way real estate is right now with the limited inventory, chances are prices are going to go up, and you could have got in at a lower price now than waiting to get the down payment 2 years later. Do you know what I mean?
Nobody knows
Yeah.
if rates are going to go up or down. Nobody knows if house prices are going to go up or down. A house, if you just sit there and wait and wait and wait, you'll never do it.
Right.
If you a house is the most important thing in your life. It's the biggest expense, and it's going to make you the happiest. Why sit back and wait 2 years and miss out on owning a home if it's reasonable with these rates and you find the right price? Now, if you don't find it, then don't buy it. But I think it's worth taking a look right now with these rates in the fives. I don't know if they're going to go to three. If it does, I think we're going to have a lot of problems in our society. I think we'll have a thing called hyperinflation. I think the Fed will start raising rates if we get to hyperinflation types of things. So if the Fed prints money again and lowers rates to the 10-year to zero again, I think we're going to have a real serious problem in America, and I don't think they're going to do that. I think they want to lower them slowly and find that equilibrium where people are buying and selling homes and the activities there. I don't think they're going to slam the rates to zero. Like the public thinks that they're going to go
No.
back to zero for some reason.
No, and if someone were to ask me what I think the Fed should do, I think to help the housing market, help make housing more affordable for people, which there's a trickle down into the rental market as well. We haven't seen that decline in housing prices the way we thought we would see with the increase in rates. I don't think enough time has passed because there just hasn't been enough inventory.
Right.
I think that in order to combat the situation with the out of control cost of home ownership, they need to raise rates again.
To get
And
the
I don't know.
sellers to get the sellers to start selling, and that's happening a little bit.
Yeah, it's a double-edged thing. I think they're trying to see they're going to park themselves here in where rates are now for a while, few months, at least 6 months, as they should, to see what that does.
Yep.
Because going too low will create the bidding wars again, and people can afford more until, oh, I can afford it. I'll just pay 50 grand more, 100 grand more for the house, you know, and
Yeah.
that's where we were. And because I feel like they left the rates too low for too long,
Yep.
and it allowed too many comps to be out there to set the market, you know?
It turned a 25-year-old kid who barely knows how to tie his shoes into an Airbnb-er. You know what I mean? And that's it's not supposed to be that easy to make money, buy a house, rent it out, make 10 grand a month, and it's that easy. It's not that easy. So there's a lot of people that did foolish things in the housing market over the last few years because everything was so cheap and people made money in their Bitcoin and there's so many things that went wrong because of that easy money, and the housing market was one of them.
I'll tell you
Yeah.
another thing. You want to sit on the sidelines waiting for the right opportunity on rate. I'll tell you something that's not going to stop that I keep hearing from people who are renting is your rent's going up. That doesn't seem to stop. People are calling me right now. It's December. They're already getting a notice from their landlord that their rent's going $300, $400, $500 a month higher. And you know what? If you don't like it, there's somebody waiting right behind you to go rent it. So why not buy a house?
Yeah,
Right.
the investors are buying properties still, and they're keeping the rents high. They see the
Yes.
high rents, and they see returns on their money.
Right.
If they pay cash, they're not affected by these rates. So
They're
Yeah.
not affected by it. Right.
it's just
What are you gentlemen seeing with rates for reduced documentation loans like bank statement loans? What
they're
are you seeing with those rates right now?
they're in the sevens now, and they were in the tens 2 months ago. I'm just getting in the sevens now. So if you
Hmm.
want to do a DSCR loan, no documentation investor loan, I can get your rate in the sevens if you got good credit. So you
Right.
put 20% down, and I can get you into a house as long as you got good credit. And there's no documentation. The house either A has to cover the rent has to cover the mortgage payment, or I have a no ratio where the rent doesn't have to cover the payment, and you pay maybe 8 1/8 instead of 7.875.
Mhm.
So these rates are getting reasonable again to turn a profit,
Right.
on these homes. There's a profit now on a home with these lower rates.
Yeah, absolutely. I mean, and I the other thing too is what I've been seeing for the last few months, a lot of people were looking for home equity lines because they didn't want to touch their first because they had
Yep.
such a low rate.
Yeah,
And it's a little bit more difficult to get that second mortgage versus in many instances
it is. It's a teeny
versus
process.
versus versus just a cash out refi. But now with rates coming getting lower, there that gap isn't as large, from where the rate might be, and at the moment, and so it might be more palatable for them to do a cash out refinance
Yes.
to get the cash that they are looking for at this.
So here's an example. I closed a guy in April. I went through my notes, found his rate. I saw it was 7.5. His score is still 602 or so like that. I saw that I could do a VA streamline. His job switched where he doesn't make as much money anymore. He's straight commission and his commission's way down on his business. And I could do a VA streamline and drop his point a rate, drop the rate a point. He's going to save $200 a month. He thought he was going to have to wait 2 years based on his research. So he didn't even know that because he switched from full salary to 100% commission, he thought he was dead in the water for 2 years. But VA has a no income, no appraisal refinance. All they care about is your mortgage history and your credit score. If you're late on your credit cards, if you're late on your car, they won't even see it. We just
And there,
we pull a credit score and a mortgage history. If you're on time on your mortgage, you get priced at the credit score on the interest rate. I'm going to save this guy a point. He's going to save 200 and some odd dollars a month, and
Right.
he's so happy.
That's
and
similar
the,
with an FHA streamline too,
Yeah.
right? I mean,
Just so you know, the FHA streamlines right now are a little harder because right now the rates are, even though they're getting better, they're still not paying a credit. It's really complicated, but FHA streamlines, there's a max mortgage calculation and you can't roll in the closing costs like you can VA.
right. So you got to pay points sometimes to get the rate you want, and
You got to
it's
bring money to
expensive.
close. You got to bring three or
Right.
four grand to close to get to refinance,
Right.
but it's changing. Now they are starting to give credits on these rates, but it's not there yet. So right now on the FHA clients, I'm doing a full documentation.
Hmm.
well, and the reason you could do that, the VA Earl and the streamline is because you were
Yeah.
originally credit qualified. So if you switched jobs afterwards, like Alex said, and you went from salary to commission, you're thinking in your head you got to wait 2 years to get a loan because you're straight commission. That's not the case. You can refi down because you were originally fully credit qualified, which means you verified your income. It was a full
Right.
review of credit, everything.
Let me go back to my FHA streamline. So if you get lucky and let's say you're in Florida and taxes are paid November 1st for the whole year, and you're going to do a streamline right now, there's a very small escrow amount in taxes. And let's say your insurance was just paid for the year, there's going to be a small escrow for insurance. You could do those as a streamline right now because there's not going to be a lot of things added to your payoff for your loan. But if taxes are about to be paid, like for, let's say it was September and you're closing in Florida, they would ask for 12 to 14 months of taxes to be added to your loan. You're going to get a refund from your old escrow account, but that doesn't help us close your loan. But you'd have to bring, let's say your taxes are 5 grand a year. That's 6 grand in taxes. Then you have to bring in, let's say, $1,200 in insurance plus an underwriting fee of 1,000. You're looking at 8 grand. We can only raise your loan about 1,500 from the payoff. So you're bringing 6,500 to close. Now, in the old days when rates were more normal, we would give you a rate that was a quarter point higher than the going rate, and there would be a credit of $6,000 there for us to pay that 6 grand. So depending on where you are, don't give up on us. See if we can help you with the streamline. If the tax escrow due dates just passed, you're in good shape on those. So
Yeah.
Hmm.
your job did change. The streamline's it's not out of question. They're just not real favorable yet. They're almost there, but they're not there
Right.
yet.
Yeah, but then the key is in the with the streamlines, like you said, they're not using the credit report to determine eligibility with your DTI, but they're still going to price the loan based on your credit score,
Yep.
which so you still need to have good credit if you want the best possible rate since you're refinancing.
Right.
And then the other thing is I believe you gentlemen can correct me if I'm wrong, but you're going to be there's going to be a lookup to make sure you've been making on-time payments for the last 12 months too.
Yeah, they're gonna do a mortgage history
Yeah.
only. It's
Right.
mortgage
Oh,
only.
yeah.
So if you're late on your car last month, that doesn't disqualify you for Streamline.
Mortgage.
But
Right.
mortgage does. But if you're late on your car, it just drops your score and it gives you a higher interest rate.
Yep.
But they're not going to see that. They just want a mortgage only credit report.
That's it. A
The
mortgage
only
only
thing on your
credit,
credit report
exactly.
is everything else is deleted, and there's your mortgage history, and there's your credit score. And then there's no appraisal and no income. It's the best. There's gonna be a lot of those coming through the pipe in the near future.
And how long is it typically taking you to close a streamline refinance, assuming that
They're 2 weeks.
that
2 weeks.
yeah,
There's no there's nothing. All they do is a verbal on your job too. So
right.
there's no written verification. That takes a while. The appraisal takes a while. The only thing we have to do is order title, update your insurance, and get a verbal from your job, and run your credit report. It's that easy. The underwriting's so fast. I mean,
Yeah.
Right.
it could probably be faster right now. Maybe even 8 days we could close these things if your
Yeah.
processor's good enough and submits it real fast. You e-sign really fast. The underwriter looks at it the next day, and it's a real easy loan.
I
So
guess so. Who you're really waiting on? Title work,
yeah,
right?
yeah, and they're
Um,
fast right now.
and
Nothing
that's
else.
it.
It's
Yeah.
it's that easy. So if you've been tortured in the past, and I've done it myself, and you're like, I don't want to go through that process again. It's not that process. So it's so easy. There's no terrorizing you. It's the
Right.
easiest loan in the world.
It's
So
the easiest loan out there.
yeah,
I don't know, that maybe a DSCR second, but they're easy.
I mean, on a
Streamlines.
purchase, we earn our pay. On a streamline, we don't. But I think the streamline's making up for all the torture we've been through for the last 4 years.
We've got the scars on us to prove it.
Yeah,
All three of us, happen to deal with a lot of difficult situations, a lot of bankruptcies, low credit, a lot of, things like that make it a little bit more challenging. But, having seasoned loan officers like the two of you, is going to make it beneficial for the borrowers who are trying to get through a tough time.
yeah,
When there's other people in the industry that might not be as skilled at dealing with those tough situations.
yeah,
Well, Alex, and we've talked about this in past videos, past, Facebook lives or YouTube lives. We try to take the necessary time up front to really vet and put our own underwriter hats on to go through your files as best we can to ensure a smoother process later.
yeah.
Purchasing a house with seller credits, FHA streamlined. Do you have enough money to bring to closing? What's your mortgage history like? All that stuff.
Yeah.
Right, Alex?
Yep. It's a hard job.
Yeah, it is. Well, I mean,
It's up.
again,
Go ahead, Eric.
to reiterate, I think if anyone's watching this and trying to get some advice or a feel for whether to purchase or refinance now, I mean, the refinancing thing is a simple math equation unless you need to cash out. But if you're looking to buy your home and it's a primary residence, I think it's and you see a house that you like, then buy it. If you can afford it, you can afford the payments, and because waiting is just not, it might not work out for you. You could end up in a situation where you waited too long and now rates are back up again.
Yep. I agree.
Yep. And housing values too.
And yes.
Right.
Right.
And your job could change. You might miss out, your credit
So
might change.
I'll tell you this real quick. Now, this is an extreme example, but this is about 2 years ago in the height when the rates were really low, and it was Austin, Texas. And I was talking to a client who wasn't quite ready in April. That same house within 6 months was $100,000 higher. Now, that's not normal. That's not normal.
Right.
But in a very competitive environment with super low interest rates, you could expect the housing values to be pushed up faster than normal.
Yeah. And it doesn't mean that house is worth 100,000 more.
Right.
It just means that there was this hysteria in the market and people thought, oh my God, if I don't outbid everybody, I might not have a place to live in or whatever they were thinking, and
Yes.
that value is more, it's like a paper value. It's not,
Exactly.
it's really not real. And the reality of it is set by supply and demand always.
Absolutely. I
once,
think it's artificially inflated.
yeah, and once there's a glut of inventory on the market, that is what's going to drive your house down. Doesn't matter what you paid for it a few years ago. So,
All right. Well,
Absolutely.
I think we've covered everything we need to cover. If you guys have been waiting to purchase, rates are low. If you're waiting to do a cash out refinance, rates are low. If you want to save some money on a rate and term refinance, rates are low. So if you guys want to give us a call, reach out to us. We'll give you a link to Eric Jeanette in the description. You guys can reach us at Guston Show. Our information's all over the YouTube video. Call us anytime. We're always open. We're licensed in 48 states, and we got Puerto Rico and the Virgin Islands. If you guys got anything to say, that's it.
Merry
no.
Christmas. Happy
Merry Christmas,
holidays.
Happy
everybody.
holidays, everyone. Yes.
Yeah, happy holidays.
Yes. Okay.
Eat
Have a
good
great,
food, enjoy your family, and watch a lot of football.
Yep, thank you.
exactly. Yep. Have a great night, everyone.
Thanks. Take care. Bye bye.